these events. We've seen lots of them, but they tend to be very good opportunities, very good entry points. And we've seen probably 6-7% rally off that period from the end of March already. And again, not saying it's over. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. We've had a pretty good week, pretty good couple weeks in the market, which is nice to see for a whole host of reasons. We've had a nice recovery rally out of markets. But how you doing over there, Greg? What's going on? What's happening today?
Yeah, it's been good. Markets. It's always nice when markets are moving in the right direction. I heard this morning, I think the NASDAQ has been on like a 7 or 8 day winning streak, kind of along with the U.S. markets, and TSX has done well. So all good news over here. What about you, Will? How are you?
Yeah, just doing my thing. We got last hockey tournament of the
nice.
year this weekend. So hopefully you can stop hearing about all the hockey updates. But we got a few games this weekend, but that's the end of the season. So after that, we'll be on to some other things, other endeavors.
Where's the tournament? Is it because I think in February you were in Niagara, if memory serves me right?
Yeah, that was our only travel, and this one's in the city. It's just different rinks around the city, okay. So we'll be traveling around Etobicoke and all over the place, but
surrounding areas.
That's how it goes. It's all good though, all good. So yeah, looking forward to jumping into things, and a bit of a sensitive week too, because we came in and you had all kinds of negativity around the U.S. Iran situation, and then when was it? I think on Tuesday night. Next thing you hear is, we've got a ceasefire and a 2-week pause, and you had a massive rally out of markets, which has been good to see. But at least short term for the last week or two, things have been moving in a positive direction, which is good and constructive for portfolios, and is nice to see for sure.
Yeah, so the main news this week was obviously a ceasefire came in place. You know, how sturdy that ceasefire is remains to be seen, but a ceasefire has come in place, which has helped the markets overall. So I guess, Will, right now, like just as it relates to the markets and everything going on, is it really just whatever's kind of happening with the war in Iran and the Middle East, like that seems to be the main driving point for markets?
I mean, it's definitely the big one. I mean, there's not a whole lot else that markets are trading on. I think we can get into some of the other sub stories as we go, but that's the biggest risk on, risk off piece of it, is that as long as this war lingers on and this strait stays closed and oil's not flowing, it's definitely a headwind and a problem for markets, and it's going to be making headlines. And there's, to a certain degree, that's being priced in for sure. But if you look to even over the last week or so, how markets have been trading, I really don't think markets are buying that this is going to stay lingering over us for the long term. I mean, you don't know. That's the thing with this. We don't know where this is going to go. There's supposed to be negotiations happening this weekend, but who has any idea? But if you look at how the markets are trading this, they're optimistic, they're constructive. Even before you heard the ceasefire announced, markets were not crashing leading into that. They were being more just cautious and saying, you know what, we think this thing's going to get resolved. We think the oil is going to start flowing again. And that's basically what markets are telling us at this point. But they've still got that headwind and that uncertainty lingering over them, which is holding things back, at least in the short term here.
Yeah, so for the last 10 days or so, we've talked about how the markets have been moving higher, which is good to see. So what in particular, Will, has been moving higher? Has it been stuff that hasn't been showing a lot of relative strength that's now coming into favor, or has it stuff that's been holding its longer-term relative strength kind of all along here?
Yeah, I mean, some of these pockets of the markets that were leadership areas pre-March 2026 are actually coming back in April, which is nice to see. And I think the last week or two, we've alluded to that March was really all about oil, energy, the defensive names, these really safe haven trades to hedge off this. But pretty quickly, we've started to see the more favorable market trends come back where some of those leadership names good. A really specific example is semiconductors have taken off in April so far, really in the last 2 weeks, where they're soaring again, and that trend is resuming. Software stocks, which back in February were lagging and having all kinds of trouble because of AI, those have actually stayed stuck in the mud and have actually been going in the wrong direction. So it's actually, although not be nice to see software taking off as well, it's nice to see more normalized trends coming back, because if we've got energy and oil and gas and consumer staples and utilities leading the market up, that's not really a good, healthy market. That's more signaling signs of recession and inflation and negative things to come. So we've got some positive signs, even if everything's not going up necessarily. We have some positive signs coming back into the market here.
And to your point, energy was kind of top of mind in March. It was doing really well. But as soon as you get kind of good news or news on a ceasefire or other news, you see energy come right back down. And you saw that this week, where it's probably one of the reasons why we don't want to, we talked about this, I think, last week. We don't want to necessarily jump into a name like energy that can reverse back very, very quickly.
Yeah, especially from an overbought, overextended position. I mean, I do think with all the disruption that's happened out there, that oil and gas, energy prices are likely to stay elevated for some time. So I don't think it's going to be quite so much a quick reversal on those, but they got to that really overbought, overextended state. And then some of these other growthier leadership areas of the market, whether it's some of the technology areas like semiconductors, we talked about some of the Meg 7 names, the industrials, the financials, also even looking at all the other commodities, whether it's gold, base metals, those areas. They got beat up a little bit in March, but they're starting to turn the corner here in April, which is good and healthy to see for sure.
Yeah, really nice to see. So interesting comparison here, Will. So it was last year, literally around this time, where Trump came out with his tariffs, and then he kind of reversed course on them. And it was kind of similar here, where he made all these crazy threats, and then ceasefire was announced, and markets had a similar reaction, although not identical. So is there anything that we could kind of compare and contrast between the two periods?
Yeah, I mean, probably the big one is just remember, and it's not even to say necessarily that this is done yet and it's over, but very similar to the tariffs in terms of a bottom being put in, is that there's still going to be when a bottom is put in and markets are going, they're going to rally in the face of uncertainty and unknowns, and that bottom might be established, but there's still going to be all sorts of things that have to get sorted out. And if you remember, after the tariffs, Liberation Day, that whole situation, the market started going and it started rallying, and nobody really had any idea, right? There was all these deadlines, the tariffs were still there, but it was a pause, right? Very, very similar, obviously a different arena, but it was, we're going to give you to, this date or that date to come up. We're going to make, so it's almost an identical playbook that's being laid out here, and not to say it's going to play out that way. It's a different space, it's a different arena, it's obviously different stakes when you're talking about the military and war and all sorts of different threats that are being thrown around that aren't obviously economic threats, but it is that same art of the deal playbook type of situation, and we've seen it before. And I think what you're seeing is maybe markets aren't reacting to it quite the same way. They're shaking it off a little bit more. I mean, the markets are still moving on it, but they're not reacting quite as extremely on that. And I think you see that even with the depth of the corrections and the recoveries as well. It's just a very similar story. So you're seeing the taco trade that's happening as well. Again, that was basically what we saw on Tuesday and Wednesday. But just remember that this has now become sort of a Trump playbook and how the markets move on this. the thing is, Trump, this whole situation is very unpredictable. It's very volatile. Nobody knows what the guy is going to say or do next, but there seems to be patterns. And if you look at how the market responds, the market represents the sum total of everybody's bets one way or the other. It's institutional money, it's hedge funds, it's massive institutions, it's every investor that's out there. And when you're seeing that gauge, it's everybody putting their money where their mouth is, so to speak, and it gives you a sense of and really a read on where the odds are and what the markets are thinking. So although the markets can seem very crazy, very volatile, all over the place, they give you a very good idea of where the risk is, where the opportunity is, and whether markets really believe what's sort of being said or believe some of the headlines that you're seeing out there.
Yeah, when there's good news or bad news, now the market seems to be taking it a little bit more in stride than maybe overreacting as we've seen, especially last year. But I guess as it relates, Will, to kind of like our portfolio, our positioning, has anything changed? Like, what are we kind of looking at right now?
Yeah, I mean we're relatively defensive here. I mean, I would say it's good to see some short-term strength, but where we took some money off the table a few weeks ago were just from some of the weaker names, some of the names that we no longer saw as long-term leaders, or names that we would want to hold, or names that we thought wouldn't necessarily get a lot of pop out of this market. But our strongest sectors, our strongest names, our strongest positions, we still hold those. And my senses on this is that what was leading the market up before, yes, some of those areas took a bit of a beating in March, and you saw traders come in and sell those down and take profits. But those are likely going to be the areas that resume their leadership. So whether that's some of the areas of technology, industrials, financials, some of the materials, the precious metals, those key sectors are more likely than not going to be the area that you see the most lift, the most pop out of as this market recovers. So we don't necessarily need to be 100% invested. We're probably hovering around 60%, 50%, depends on the mix, depends on the client, depends on the investor, but we're certainly not fully invested. We've got higher than normal cash balances right now, but we don't need all of that. We have that for some optionality, some risk management, because again, we don't know what's going to happen here. But when we have the leadership pockets in areas of the market, we can very well participate in the upside, make sure we're capturing the upside of the market, but still manage the risk and the downside and the uncertainty and just the volatility that's going on out there.
Yeah, and like what we've talked about before, we're just trying to make sure we're in the right pockets, the pockets that are actually showing that long-term strength and leadership. And because we're in there, we don't need to be fully invested. So I guess just a question for you, Will. Like, there's a lot of news, there's a lot of headlines. Like you're hearing about everything, you're seeing about it every day. What would you say to investors, or what would you? What's kind of the mindset you would encourage investors to have through this time?
I mean, just stick with the process. We're managing this. We're managing the day to day, but I would also say think to the long term here, is that we've been through a lot of events like this. I mean, even now it feels like ages ago, but it was probably only 2 weeks ago or 10 days ago I sent a note out about end of March, how these events, we've seen lots of them, but they tend to be very good opportunities, very good entry points. And we've seen probably 6-7% rally off that period from the end of March already. And again, not saying it's over. These things can extend and they can linger, but we're already seeing signs that this was some sort of correction, some sort of event, maybe not a major event, maybe not even as significant as last April, but we're seeing things move in the right direction, which is good. So at least short term, we're getting some positive signs. So stick with the process. I think most of our clients and investors, even though we're managing this day to day and looking at the trends and looking what's shifting on a day-to-day basis, they're invested in this for the long run, the long term. And I think that's the right mentality to have, is that these events happen. Sure, not fun to go through, not nice, but generally speaking, usually they resolve themselves pretty quickly. Still uncertainty out there, still a lot of unknowns, and I'm not saying that this is over yet. I mean, we still have relatively defensive positioning, but it is looking more constructive and optimistic out there, at least from a market and investing standpoint, which is good to see.
Yeah, and when we kind of look at the first quarter, I know we just wrapped up the first quarter. There was a lot of noise, a lot of volatility, but our clients, our investors on the whole ended up pretty well, all things considered. So, our job is to just really kind of manage through all of this as best as possible. So far, we're in a pretty good spot overall.
Yeah, that's another thing. I think when you look at numbers, I think probably we're certainly positive and probably mid single digits now on the year. And again, not every investor and every portfolio and every mix, but the numbers actually look pretty good. Where we're off the high a little bit, but maybe a couple percent off the peak from the end of March. So
Yeah.
it's, still room to go and room to run, but the actual numbers for Q1 and up to now, sort of first week, couple weeks into April, the numbers are looking pretty good, which is good to see. So I do think people are probably feeling a little bit wealthier, and they are a little bit wealthier than they were couple weeks ago and middle of March, which is good. So as always, we want you to be wealthy. We want to see those portfolios growing, moving in the right direction. We want you to feel wealthy, enjoy life, enjoy retirement. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. And we'll be back with everybody next week. Thank
Have a
you.
good one.